We're diving into XPENG Inc. today, Chinese company, obviously, but definitely aiming for that global smart EV space. Your sources give us a great starting point.
Right. And the mission, as always, is to sort of sift through this material together, understand XPeng's origins, their big tech focus, where they sit in the market, how they're doing lately, and maybe peek into what's next for them.
It's definitely timely. I mean, the EV space is just moving incredibly fast, super competitive. So understanding companies like XPENG is, well, pretty crucial to figuring out where mobility is actually going.
So let's start from the beginning. According to the sources, XPeng got going in 2014, founders Xia Heng and He Tao. What jumps out is their background, right? Former senior execs at GAC Group.
Exactly. They weren't exactly starting from scratch in automotive. They knew the industry.
Suggests a certain level of know-how from day one.
For sure. And while they're based in Guangzhou, the material points out they had offices in places like Silicon Valley and San Diego pretty early on.
Ah, so a global mindset from the get-go.
Seems like it. Tapping into tech talent, global trends, it underlines that their tech focus isn't just, a slogan. It's baked in.
And the target market. The sources say tech-savvy, middle-class consumers. Makes sense with that tech angle.
And their mission statement really spells it out: to drive smart EV transformation through technology and shape the future of mobility. That word smart is everywhere.
Clearly the key differentiator for them. And they've grown fast, publicly listed now, NYSE and Hong Kong.
Right. And if you break down the business based on these sources, it's kind of three pillars: the smart EVs themselves, the services around them, and then the core technology and innovation piece.
Let's talk vehicles. Seems like they have a pretty diverse lineup. The sources mention SUVs G3, G3i, G9.
Yeah, and the P7 sports sedan, the P5 family sedan, and even that newer X9 MPV, a big seven-seater.
So trying to hit different segments, but all under that smart umbrella.
Exactly.
Yeah.
Product range is good. But the real core, what the sources keep highlighting, is the tech they develop in-house.
Like the driver assistance systems.
Right, their full-stack ADS.
Yeah.
And their own operating system, XSmartOS. Plus core stuff like powertrains, electrical architecture. They're doing a lot themselves.
That's pretty ambitious vertical integration.
It really sets them apart from some others who might rely more on suppliers for key tech. It really reinforces that they see themselves as a tech company first, almost.
And then the services bit mentioned in the sources: charging, maintenance, support, even things like insurance, tech support, and loan referrals.
Yeah, building out that ecosystem, trying to keep customers engaged long-term, maybe find some recurring revenue.
Makes sense. And manufacturing Zhaoqing and Guangzhou in China, the sources say, but also pushing into Europe. Denmark, Netherlands, Norway.
Sweden, Germany too. It's a clear sign they're not just playing in China. They're aiming for global demand, establishing that footprint early.
Okay, let's zoom in on that tech focus, especially looking at 2024, 2025, based on your material. Heavy investment in AI, autonomous driving,
Yeah.
even smart cities.
Yeah, and this leads us straight to XNGP. That's their navigation-guided pilot. The sources really flag this as their high-end ADS.
So semi-autonomous driving features.
Exactly. Deep AI integration. It's pitched as key for safety, but also just the user experience,
Right.
making the car feel intelligent, not just electric.
And they're not doing it totally alone, are they? There's mention of a partnership with Qualcomm.
Right, using the Snapdragon Ride Flex stock. Think of it as like the super powerful brain needed for all the complex processing for autonomous features.
So leveraging outside tech to boost their own systems.
Precisely. It helps them push the envelope, and you see this tech filtering into their newer models.
Like the G6 SUV from 2024, described as a mid-size coupe SUV. Seems like it hit a popular spot in the market.
Yeah, sources suggest it was well-received, good for volume, and then the X9 MPV in 2025.
The big seven-seater.
Tapping into that family market. Sources say early signs of adoption are positive. These new models, packed with tech like XNGP and that Snapdragon chip, are presented as really driving their competitiveness and delivery numbers.
Okay, so with all this tech, how do they actually stack up in the market? It's notoriously tough, especially in China.
Oh, it's incredibly crowded. Your sources list the big ones: Tesla, obviously, NIO, Li Auto, and the giant BYD. Each has its own strengths, its own angle.
An XPeng slice of the pie. The sources say about 2% of China's passenger new energy vehicle market in 2024. Over 190,000 vehicles sold.
which sounds like a lot, and it is, but in the context of the massive Chinese market, it's still, relatively small share.
So how do they plan to grow that? The sources keep coming back to the tech, right? The smart features, the autonomous driving focus.
That seems to be their main strategy.
Yeah.
Differentiate through technology, be the smartest car on the block, essentially. A disruptor play.
But that brings challenges. Competing with Tesla's brand cachet?
Huge challenge. And BYD's scale and affordability focus? That's immense pressure from both ends.
It helps to know who's behind it all. We mentioned the founders, Xie Heng and He Tao, with their auto background. But Chairman He Xiaopeng came from Alibaba and UCWeb, right?
Yeah, likely bringing that strong internet software-first culture that probably shapes a lot of their strategy.
And they got some serious backing early on, according to the sources. Xiaomi's founder, Lei Jun, VCs like Sequoia, Kleiner Perkins.
Plus big corporates like Alibaba, Foxconn, IDG Capital. That's significant validation and, obviously, financial muscle early on.
Shows belief in their vision.
Definitely. And the sources even kind of nod to the competitive landscape, mentioning figures like Elon Musk indirectly. I mean, Tesla's push on autonomous driving has absolutely spurred XPENG and others in China to ramp up their own efforts.
Okay, let's shift to performance. How are they actually doing, financially speaking?
The sources paint a picture of transition. Strong growth in deliveries, but costs are high. That's the crux of it, transition. 2024 revenue looked decent, $5.7 billion from cars and services. But, and the sources are clear here, they've historically posted net losses.
Because of all that R&D and expansion spending we talked about.
Exactly. High investment costs. The exact 2024 net income isn't detailed here, but that's the pattern. Still, delivering over 190,000 cars is significant growth.
And liquidity is apparently okay, cushioning those losses, even without specific numbers in the material.
Right. Looking into 2025, we don't have their Q1 numbers yet from these sources, the report's pending. But the wider context seems positive.
How so?
Well, the sources mentioned overall Chinese EV deliveries were way up in April 2025, like 83% year over year for Chinese makers combined. That suggests, a favorable market environment for XPENG, though we need their specific results.
So drivers are EV growth in China, plus that international push.
Yes, but the challenges remain fierce competition. Macroeconomic stuff like tariffs, supply chains, those are real risks.
And all this, the growth, the costs, the competition, it plays out in the stock price, doesn't it? Sources noted around $10.37 recently, market cap near $19.7 billion.
And it's been volatile. IPO'd at $15 back in August 2020. That up and down reflect the whole EV sector, really. High risk, potentially high reward.
Underperformed some rivals since IPO, sources say, but still seen as a key player in China.
For sure.
Okay, let's try to pull it all together from the sources. What are the core strengths and, well, the big risks?
The drinks. Definitely technological leadership comes up again and again, that ADS XNGP focus. Then product diversity, having different models like sedans, SUVs at MPV. And third, those global ambitions, pushing beyond China.
Okay, and the risks?
Competition is probably number one. Tesla's brand, BYD's scale and price point that's intense. Their macroeconomic factors, trade issues, supply chains, economic slowdowns could all hurt. And financial stability, those past losses show how capital-intensive this is. Profitability is still a question mark, despite revenue growth.
So market sentiment is split based on the sources. Bulls and bears.
Pretty much. The bulls are all about the tech edge, the potential in autonomous driving, growing share in that premium smart segment. They see huge long-term potential with EV adoption.
While the bears focus on
The brutal competition, the red ink on the bottom line, the stock volatility. They worry it's just too crowded, too expensive to win.
So the overall outlook presented in the sources is potential, but with big ifs.
Exactly. Position for the future with tech and global reach, but execution is everything. Analysts quoted suggest big growth is possible if they scale production effectively and keep that tech lead. There's even talk of potentially doubling their China market share by 2030 if global expansion works out. But huge execution risks are acknowledged. It's high stakes.
Let's make that stock volatility real for you listening. Imagine putting $1,000 into XPENG at the IPO.
Okay, IPO date August 27, 2020. Price was $15 a share.
So your $1,000 gets you, what, about 66, 67 shares. Now, fast forward to May 2025, using that $10.37 price point.
Well, that $1,000 investment would be worth roughly $691.67.
So yeah, a loss of around 30.83%. It really highlights the risk, doesn't it?
It absolutely does, captures the volatility. Though, as one source notes, some might see the current price as a discounted buying opportunity if they believe in the long-term story.
Definitely illustrates the swings in this emerging industry.
High potential, but yeah, real risk.
So wrapping up this deep dive, XPENG. Clearly ambitious, fascinating company. They're betting heavily on being the smart EV player, defined by advanced tech like ADS, an expanding product line, and that push into global markets.
But doing it all against incredibly tough competition, navigating those financial pressures from heavy investment, it's this constant tension between opportunity and challenge.
Hopefully, walking through your sources like this has given you, the listener, a clearer view of XPeng and its place in the whole EV race.
And maybe leaves you with a thought to chew on. XPeng's strategy is deeply rooted in advanced tech and autonomy. Compare that to rivals focusing maybe more on pure scale, like BYD, or maybe extreme affordability. Which approach, which bet do you think is more likely to win out in the long run for the future of mobility?
Interesting question. Definitely something to consider. And if you're tracking XPeng, the sources suggest keeping an eye out for their upcoming Q2 2025 earnings report for the latest numbers.
Well, thanks for bringing all this material together, made for a good dive.